weekly funding meter, and we have Arun Natarajan from Venture Intelligence with us to give us a 360-degree perspective of all the funding action in the week gone by. Arun, good to have you on the show again. Tell us, last week easily looks like one of the best weeks in terms of funding this year. Take us through some of the key deals and the money that were pumped in.
Sure. So, it's kind of very interesting that last week we had the biggest, in terms of dollar terms, $229 million getting invested across 7 venture capital investments. And this is coming just after the week where we've seen the lowest period. The previous week had just seen 6 transactions worth just $9 million. Obviously, the contributing to this is the biggest of the transaction was Big Basket raising $150 million third round, led by Middle East-based Abraj Group with participation from newer investors like IFC and Sands Capital. And then we had Sofina, a Belgium-based investor, investing $70 million along with existing investor Sequoia into Byju's classes, which is an app-based tutoring as well as test preparation company. So thanks to these 2 transactions, as well as Mr. Nandan Nilekani, co-founder of Infosys, he had invested into a mechanical engineering company, SediMac, $7.5 million round, along with the existing investor Nexus. So all of these have contributed to making this week the biggest, at least in value terms, for the current quarter and the year.
Arun, that sounds like a really good week for startups as far as funding is concerned. But my question is this positive swing sustainable? Considering it came after a really poor week of funding before that.
Sure, we probably have to look at this in the early stage segment and the growth stage separately. The early stage, despite all the international, kind of nervousness, has been chugging along quite fine, especially the angel segments. We are seeing consistently, including the latest week, at least 10, angel investments going through and 3 to 4 seed kind of capital investments going through. So that is probably expected to continue. The volatility that you talked about is essentially coming from the growth stage, and that to the dollars that get contributed. And that the selectivity of the investors, in deciding which of the companies they funded earlier will go on to raise the Series C and Series D kind of investments. And good examples, we have seen these 2, whether it is Big Basket or Byju's, where the unit economics and the scalability proposition are not in question. You are getting a lot of international investors happy to do these 3rd and 4th rounds. So that is a bit of a question mark. The growth capital, will that come back? And we probably set to see the kind of volatility. Early stage seems, at least so far, quite fine and steady.
Arun, let's talk, the investor mix over here. Tell us, how is that changing? We saw hedge funds dominate the scene last year. What is happening at this point in time?
Correct, very much. So we looked at, the first half of the year, which is the fiscal one, April to September, and then, the October to now this month, March, where, there has been a substantial amount of nervousness. The first 6 months, of course, was, heady days with all kinds of investors, hedge funds, Russian funds and whatnot, rushing into startups in India. And very much, on the topic of hedge funds, as well as hedge funds linked, investors, Tiger Global, of course, being the best known of them. They've slowed down as much as 76%. So Tiger Global, for example, did 18 investments in the first 6 months and just 5 in the last 6 months. Similarly, other names which followed the Tiger into India, SteadView Capital and others, pretty much in the second 6 months they are not even visible at all. If you take other segments that have slowed down, the corporate VCs or strategic investors, interestingly, have slowed down as much as 44%, and these are names like Qualcomm Ventures, Nokia Growth Partners, who were quite brisk in the first half, have slowed down quite significantly. On the other end of the spectrum, the family office segment, led by obvious names that we've been talking about in recent weeks, family offices of Mr. Ratan Tata, the Infosys co-founders, Mr. Ronnie Screwvala of Unilaser Ventures, they've significantly stepped up activity. That category as a whole is up 38%, and they were actually quite active in the first 6 months as well. So, if you look at the mainstay, the big segment, which is the traditional financial capital, we are seeing some interesting trends there as well. For example, the India dedicated funds, your Sequoia India, Axel India, for some reason they have kind of decelerated more than the foreign funds who really don't have to deploy their capital only in India. So interestingly, names like Japanese funds, BNOS partners, M&S partners, they've really stepped on the accelerator and invested more in the latest 6 months compared to the previous 6. So from an entrepreneur perspective, there is clear rotation in terms of which pockets they could tap. Whether this will sustain going forward, we'll have to wait and see.
We'll have to wait and see. I'm afraid, Arun, we'll have to let it go at that. But all said and done, it's the best week in 2016 as far as funding for startups is concerned. Arun Natarajan of Venture Intelligence, thank you so much for taking time out to be with us here on ET Now Startup Central.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNow Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.